Hello, everyone, and welcome to the first HICAP 6x8 Recovery Top of Mind webcast series. My name is Jeff Higley. I'm president of the BHN Group, which oversees hotel investment conferences around the world. Everyone around the globe has been affected by the global pandemic, and the search for information about how to recover from it is as robust as ever. Today's webcast, again, HICAP 6x8 Recovery Top of Mind, features 6 of the hotel industry's top minds. Kwon from Banyan, Michael Issenberg from Accor, Tina Yu from KSL, Jesper Palmqvist from STR, Mike Batchelor of JLL, and Robert Hecker from Horwath HTL. While these leaders help mold the direction of the industry in the Asia Pacific region, today's industry's discussion will undoubtedly touch on topics that resonate around the globe, as we're all looking for ways to jumpstart a recovery. It'll be fast-paced, and the time will go quickly. We'll be adhering strictly to the 8-minute limit, with maybe a few seconds on either side, and the speakers have been forewarned. Unfortunately, there won't be any time for questions today, so please relax, sit back, and enjoy the conversation. So leading, let's see here, I want to get that. There we go. So there we go. So leading off the conversation for us today is Kwon, the executive chairman of Singapore-based Banyan Holdings. KP started his career as a journalist, founded Banyan in 1994, and today has 48 hotels in his portfolio. He received HICAP's Lifetime Achievement Award in 2019. So KP, good morning to you.
Good morning. Hi, good morning to you.
So what's on the top of your mind today on June 3rd, 2020 in Singapore?
Well, you know, the real top of my mind right now is wondering which Netflix series to log into, because I just finished the last one and I'm getting a bit desperate. It's been locked mode for quite a while, so that's top of mind. The second top of mind, of course, is when is everyone going to start flying again? Because I think for all of us in this industry, unless airlines start flying, we can only rely on domestic travel. And some of the bigger countries like the US and China, domestic travel is sufficient to keep their hotels full or nearly full. But for the rest of us, and particularly for myself in the resort industry, unless airlines start flying and people start sitting in those seats, we're still facing zero occupancies.
So first of all, before we get into the task at hand, what was the last Netflix series that you watched, and have you tried Ozark yet?
Well, yeah, I'm into Ozarks already. I never knew the Ozarks. I mean, I never thought the Ozarks could be the subject matter for a movie. Was really like the boonies, as far as I was concerned. But I've sort of gotten a little bit bored with it. I've switched to other things. As you get more and more frustrated, you start flicking around to more and more different series. Desperation grows.
Well, and that's what we hope travelers do, is start flicking around to different destinations. You mentioned the resort destinations being a little bit slow. So how would you describe the state of the hotel industry in Asia at the current time, with that pretty much domestic travel oriented business?
I think the industry is such that the impact is quite differentiated. If you are a central CBD business hotel in a major capital city and in a large country, you're likely to be less affected, because once the lockdown is over, there will be essential travel still. Even though people still continue to work from home, people still do need to travel. If you are in the most remote place, you're probably facing the lowest occupancy now. The irony, however, is that in the longer term, one of the effects, I think longer term effects of COVID-19 is that people are going to look for more isolated, socially distanced destinations, as it were. They'll look for more wellness. Wellness is becoming a major theme, and since Banyan has been well known for wellness and so on, we're finding a lot of interest on the part of our loyal guests in the past who want to come back to all villa resorts featuring wellness. So the longer term would be good for us, but the shorter term is is not so good. So it's a patchy picture, and it's not as if everything is exactly the same across the hospitality industry.
So patchy picture is kind of the phrase there. How does that equate to the luxury segment of the industry where your hotels reside? How will those hotels look 2 years from now, 3 years from now? Is there going to be an evolution of sorts with what you offer at your hotels, what guests expect, and how will that all shake out?
I think that's a very interesting question, because if you look at luxury, not just in the hotel industry, but you look at luxury even in terms of consumer goods, I think COVID-19 has shown people what really matters in their lives. And there's going to be a lot less emphasis on the bling bling side of luxury. There'll be more emphasis on luxury, not because of luxury alone, but simply because the luxury, for example, that we're supposed to be associated with, which we've never been proud of because it's luxury as such, it's because people want to find wellness. People want to go to places where they can celebrate life with other people in more remote destinations. So things will get more costly. And obviously with travel, luxury travel is associated with traveling business class and first class. So you have less risk of infections and so on. So I think there's a natural momentum towards a more expensive consumption rather than mass consumption. But even the more expensive consumption will no longer be led by sheer ostentation. There's a lot more importance on finding authenticity. And that's what I think we're looking for, and that's what the consumer goods industry is looking for too. More authenticity and provenance in the consumption of expensive things.
Yeah, even before COVID became, part of our everyday language, experience was what it was all about in the luxury segment, really in the entire hotel industry. Will the experience factor be as strong or stronger as we get out of this pandemic?
I think it'll be stronger. I've always maintained that crises do not really change anything fundamentally. They essentially accelerate trends that are negative or trends that are positive. And so, for example, working from home was already an existing trend, but it's going to be accelerated by this crisis. The trend towards experiential tourism was already there, and it's going to be just much more rapidly accelerated by COVID-19. And I think that definitely people are not out there to buy expensive things for its own sake. People now want to experience the things that they've always wanted to experience. And I think having been under lockdown for 2-3 months, having seen people die around you, has just made people a lot more aware of what is important in life. And that's to share good experiences with the people you love. And travel will always be an essential part of that. We just need to adapt to it so that we meet the new awareness of our guests about what really matters in life.
What have we learned as an industry so far from the COVID-19 experience? And are there any measures to put in place that you've put in place that maybe will become common as we advance through the various stages of this?
Well, there's a saying that generals always learn only from the last battle, and the next war is always very different. And so I think, we all now start thinking about how life is supposed to be completely different after COVID-19. It won't really be that different. There'll be more hygienic measures and so on, but travel will resume. I mean, like after 9/11, people said nobody's going to fly on a plane anymore, but now it's just normal that you just, can't take more than 100 ml liquids on planes with you. So we've all adapted to that. But I think what really this whole crisis has made me aware is that the hospitality and tourism industry is probably the single most event risk impacted industry in the world. We're the one industry which is most susceptible to event risk, whether that event risk is natural disasters, whether they be health epidemics, whether they be political riots and so on. Tourism is the most fragile industry because it's not a necessary good. It's not like toothpaste. It's not like food. You don't need to travel even for business now, as we all know. So the littlest thing can just disrupt tourism. And the lesson from that, more than anything else, is that since we cannot predict when the next black swan event is going to be, we had just better be very, very resilient and know that even as we recover from COVID-19, we'll be hit from behind by something else that we won't expect 2 or 3 years from now. It's just going to happen, and it's going to be part of life.
Final question. We have about 30 seconds, KP. What's the one thing that the industry in the Asia Pacific region needs to do to keep building on the momentum that it's experiencing?
I think to me it's really clear. It's clear because we've talked all about an Asian century, but it really hasn't happened in terms of tourism. Regional domestic travel in the Asia Pacific region has not yet risen to the levels that we need it to be to replace the fact that a lot of people in the West are not going to travel to Asia. It's not, there's going to be a lot more political decoupling between China and the US. So we just have to have a lot more Asians who are now of middle class bracket and of younger people who now can travel. We need them to travel a lot more so that they can make up for the loss of travel from the Western countries.
Very good. Let's hope that happens sooner than later. KP, it's always a pleasure catching up with you. I really appreciate you being here. Thank you very much for your time this morning.
Thank you. Bye.
Have a good day. Bye-bye.
Thank you. Bye-bye.
Okay, as always, KP Ho, some very good insights. Next up on this HICAP 6x8 session is Michael Issenberg, the CEO of Asia Pacific for Accor. Michael has been with Accor for 26 years, and you've held your current role since 2008. Michael, welcome.
Good morning, Jeff. How are you?
I'm well. How are you today?
Yeah, pretty good. Pretty good.
Good. Well, let's start with the question of the day. What's on the top of your mind as June starts taking hold?
Yeah, well, unfortunately, I watched a little bit too much news this morning. And as you know, I was actually born in Massachusetts, and watching what's going on in the place of my birth is pretty disheartening, I have to say. But you know, I did leave in 1985, and it's a very different place now, and I do despair a bit for the future and where that country's headed. But we're here to talk about Asia Pacific, and certainly I'm much more positive about Asia Pacific. And it was interesting. I was in Paris at the very beginning of February for an executive committee meeting, and you know, COVID-19 had just really started to impact. And in fact, a couple of days before, Singapore and Australia shut their borders to China. But my colleagues from around the world then still said, oh, you know, it's an maybe Asia Pacific problem, and it's not going to impact the rest of the world. Well, we certainly know that's changed dramatically. And it's remarkable to me when you look at what's happened in Europe, North America, South America, and then Asia Pacific, how well this part of the world has responded to the epidemic. And I actually think that bodes very well for us for the future.
Talk a little bit more about that. You know, here in the States, we're hearing about the green shoots that are coming up throughout Asia, throughout the Asia Pacific region. Are you seeing any hot spots, or in your portfolio, are there any specific segments that are outperforming the others that give you more optimism?
Well, yeah, I think we all know that it's all, you know, all travel is going to start local and build out from there. But it's really all about each individual country and how they've not only dealt with the pandemic, but how they intend to deal with the pandemic. You know, no question, China, our business continues to climb. You know, we hit a low of about 7% occupancy in February, and we'll exceed 50% in May. But you know, initially, certainly mid-scale and economy performs better. And as I said, the drive market is key. That's relatively short term. Australia and New Zealand have dealt with the virus extraordinarily well, truly flattened the curve, but they're also being very, very cautious in how they open those countries up. But again, I think that will stand in good stead for the medium term.
KP mentioned air travel, and you just talked about Australia, domestic travel within Asia. we've got the New Zealand, Australia bubble, I guess is what they're calling it, where there could be some travel between there. How long do you think, or when do you see air travel coming back to the point where maybe travel could become more than just domestic travel to drive traffic to the hotels?
Look, nobody knows, but most airlines have obviously canceled all international flights in June, and for the most part in July. I don't see like Singapore's just negotiated essential travel with China, but that's extraordinarily limited. I honestly, before August, almost none, and even August, I think not really. September, certainly some hope, and I think I've described it almost like free trade agreements. Each country is going to negotiate with each other country on how they're going to open up. People refer to it as a bubble, but what tests are going to be required, how that's going to be handled, and it is going to be very much one-to-one. But I do, assuming all goes reasonably well, because that's no one can predict what's going to happen with the virus. I think in September we'll start to see some international travel.
Let's take a step back. You said that your occupancy in May for China was going to be 50%, 50, correct? Yep. So what's going on at those hotels? What kind of cleaning programs, or what kind of protocols are in place to embrace, to allow the travelers to embrace those hotels and start staying?
Yeah, well firstly, and again, it varies a little bit in terms of what the mid-scale and economy has definitely bounced back faster, right? So that's over 50, whereas the premium and luxury is under 40, and even that varies a little bit around the country. But we launched a program called All Safe, which has been signed off by Bureau Veritas, a French company, in terms of the products that we use and the procedures that we put in place. But again, you have the plexiglass at the front. Besides cleaning itself, you have plexiglass at the front desk. Buffets we still have them in China, but they're individually served. Private dining rooms, which are always popular in China, are even more popular now. But again, there was certainly an expectation, particularly of the international brands, that the hygiene and safety was world class, and it is. And it's not that's not the fear. The travel is more the fear, but people are what's interesting is not only is it dry, but leisure, people are busting to get out. And so, like, particularly the May long weekend at the beginning of the month, all of our hotels that were leisure oriented within a couple hour drives of the cities did extraordinarily well. But it's the business, and everyone, we know the people on the call, but unfortunately, most of the average people, politicians, they think of travel as leisure, as holiday travel. We all know that the biggest part of our travel is corporate, MICE, airline related, and those segments are going to take longer to come back. And that, that's the first question. In fact, I think Rob Hecker, when we were talking yesterday, said, when am I going to start traveling again? And that's an individual personal question, in that when will you say, no, okay, for business, I'm ready to travel and travel freely, and that's going to take more time. Of course, MICE travel is going to take the longest to come back of all. So it is, whilst there's definitely green shoots, it's not going to bounce back that quickly. And particularly, as KP said before, in our region, certainly you got countries like Indonesia, China, Australia, Japan, have a lot of domestic business. But the Thailand, Vietnam, a lot of the other ASEAN countries are very much reliant on air travel, so that they are going to take longer to come back. Here in Singapore, of course, 90%, if not more, is all international travel. That this will be probably the last market to truly recover.
Okay, kind of closing things out then, Michael. Same question that I asked KP to close. What's the one thing that the hotel industry in the Asia Pacific region needs to do to maintain or keep building this momentum that's been established?
I'd come, particularly for Asia, I come back to what I said before, is that the agreement on how we're going to travel from country to country is crucial. And getting that protocol in place, just like after 9/11, all of a sudden the security came in place. Here it's all going to be about health checks and what's required, what information is going to be shared. That is going to be the most crucial element of getting our business back to where we want it to be.
Okay, very good. Michael Issenberg from Accor, thank you so much for being here. We'll continue to root for the Red Sox and the Boston teams in your honor, but we really appreciate your time today. Thank you very much.
Thanks, Jeff. Take care. Bye-bye.
All right, take care. Bye-bye. Okay, great. Thanks, Michael. As always, very full of information. Very interesting to hear the recovery that's taking place in the Accor portfolio. So let's move on to Tina Yu, Principal and Head of Asia for KSL Capital Partners. KSL is a private equity firm that has raised approximately $12 billion of capital through debt and equity funds over the last 2 decades or so. Tina, welcome to HICAP 6x8. How are you this morning?
Good. Thank you for having me, Jeff.
Well, it's certainly our pleasure to have you joining us today. So let's get right to the task at hand. I'm going to start my timer there. And what's on the top of your mind from KSL's perspective as as June unfolds and we start seeing what people are calling the beginning of a recovery? What's on the top of your mind?
Yeah, sure. There's 2 things on the top of my mind, one from a personal perspective and one from a professional perspective. From a personal perspective, I think both in my interactions professionally and also personally, I think trying to be more empathetic as a human. Everyone's going through a really tough time. So whether that's people I encounter in my personal life and my friends, or also, frankly, the employees at our portfolio companies and investments, the management teams that we're basically asking to do incredible tough decisions and make a lot of personal sacrifices during these times. Our interactions need to always in the back of our mind, keep that in mind. And then I think from a professional perspective, I think it's really just thinking through how to make decisions, both from an investment perspective, but also for our current investments through times where for data-driven investors, it's incredibly tough to even say what's going to happen in the next 12 months. We're data-driven. We like to predict demand. And I think as you heard from the previous panelists, so much of what's going to happen in the next 12 to 18 months are in the hands of government officials and health officials, not in the hands of consumers. Even if I want to travel today, I can't travel, right? So I think we can do all the surveys we want. We can look at all the previous cycles of what happened during the recovery we want, but this isn't an economic driven cycle. And it's almost unprecedented in terms of it's out of our hands. It's out of all of our hands in terms of the panelists today, where each consumer from each country will recover and when they'll recover.
So how does a company like KSL, how do you on a day-to-day basis go about the business side of things when you're trying to look at potential transactions? You may be trying to divest from some assets that you own. How do you look at things when there is so much uncertainty? And how do you think that'll take shape as the next 7 months through the end of 2020 unfolds?
Yeah, sure. So maybe taking first from our existing investments perspective, the last 3 months has, without a doubt, been challenging as it has been for everyone. Largely through the last 3 months, at some point, over 90% of our portfolio globally, which included over 200 hotels managed or owned, and 500 some odd franchise stay spas and fitness facilities. It was about protecting our people and protecting our liquidity. So cash is king these days when you don't know what's going to happen in the next 12 to 18 to 24 months. As you can see from what a lot of the public companies that are raising money in our space has done, it's about shoring up the balance sheet so that in the event that this continues longer or there's the possibility of second wave, you have the cash to ride effectively the cash burn, right? I've never talked about cash burn so much in our industry because it's a concept really reserved for venture capitalists where you're investing in zero revenue or you're investing in negative EBITDA businesses. But everyone, when you have zero revenue coming in or very limited revenue coming in, our industry is all going through a negative cash drag period right now. And so cash is really important and liquidity is really important for our existing investments. In terms of making new investments, we have been active. It's been more in structured investments, whether that's in the credit side of things or looking at preferred debt to help other companies seeking liquidity. And it's also been in the public equity space. I would say we are reviewing M&A transactions. And there, I think you just have to be careful with how you underwrite the next 2 years. I believe fundamentally that there will be a recovery in the medium to long term. But I don't believe that anyone knows what's going to happen in the short term, even if we want to. You know, we can say all we want about predicting Q4 and looking at green shoots, but you just don't know when it's a health pandemic, and you know, governments can shut down travel at any point.
Yeah, I think the word of the year is pivot. You know, everybody's trying to pivot, but you know, I think it's more about flexibility. You've really got to be able to be nimble no matter what the situation that arises. How does a private equity firm like KSL stay nimble? Do you have daily meetings worldwide? How does that all work?
Yeah, I mean, we're just like everyone. We're doing Zoom virtual, or for us it's WebEx, Zoom, whatever, but we're doing daily video calls. We're trying to communicate more, and I actually think it's been quite efficient. I mean, we're all privileged from a privileged position. Everyone, I suspect, that are the panelists and majority of the attendees can afford to work remotely from home by the nature of our jobs, right? And we have actually more conversations and more daily conversation, probably globally, as an investment committee these days than we had before, which has been interesting. And you know, in terms of staying nimble, I think it's about also making sure that you are effectively communicating with your investments. So we have bi-weekly or once every 2 weeks, we have a global CEO call these days, which has actually been terrific. I mean, all of our portfolio companies, 15 some odd CEOs will participate in effectively a conference call where they're sharing best practices of what they're doing within our investment, so the challenges they're facing, what challenges they foresee, what has been some good mitigants that they've put in place to get creative source of revenue. And that's been something that we've been wanting to do for a long time because we are a sector focused fund. So we always talk about making sure there's cross sharing of best practices, and we do it on a selective basis. But the fact that now we have this regular dialogue amongst 15 CEOs that we own, I think that's been really terrific from a communication perspective, but also for all of our portfolio companies to actually benefit from each other. Great.
So I guess the question of the day from a transactional perspective, from an investment perspective, is hotel valuation. Is there a way to do that in today's environment, or is it kind of a wait and see situation? How do you look at values right now?
I think there is a way to do that. I don't think that the bid-ask gap has changed, which is why I don't think you have seen that many true M&A transactions. You've seen capital raises by public companies or hospitality companies or large private companies that are, raising debt or, convertible or preferred debt. But you haven't really seen that many true M&A transactions because, frankly, from a owner's perspective, the majority of the valuation expectations haven't changed post-COVID, right? And that's not to say that there's an expectation that there should be tremendous distress and vultures and buying this opportunities, but there is an expectation that the risk profile of every investment in our space has changed. And so I think there's a way to underwrite that if you really try to look at the scenario where that 2020 and 2021 is our recovery years, and figuring out what it really means to recover back to peak in year 3 or 4, and what that implies in terms of return profile and valuation. That said, the only markets that have reflected that type of adjustment were the U.S. hospitality public markets. That's since changed. The markets have largely recovered and valuations have rebounded. But I haven't seen any change in valuation expectation post-COVID in the private markets thus far. So there still is a large bid-ask gap from an investor perspective.
Great, great. Tina, one last final question. We have about 30 seconds. What is the one thing that the hotel industry in the Asia Pacific region needs to do to keep building the momentum it's built?
That's a really good question. I think, from my perspective, for the countries within Asia Pacific that have a large domestic base, I think it's important to really not necessarily completely shift focus, but also focus on those travelers. A lot of the supply that's gotten built within the Asia Pacific largely caters to a certain international clientele, and they're all branded luxury properties. I think if we're talking about the rising middle class and looking at the income levels of countries like Vietnam, et cetera, that's not where they want to stay or where they can afford to stay, right? So I think it would be, if you look at the US, where 80% of their travel is domestic, and that allows them to be resilient in black swan events that impact international travels. I think longer term, that's really important to those countries. And then for the countries that absolutely have to benefit from international travel because of how small they are, I think the points that the previous panelists made about building intra-travel is particularly important.
All right, very good. Tina Yu, KSL Capital Partners, thank you so much for taking the time to be with us this morning.
Of course.
Really
Thanks, Jeff.
All right, take care. We'll see you. Okay, so moving on. Next up is Jesper Palmqvist, a former coworker of mine. Jesper is the area director of Asia Pacific for STR and has been with the company since 2013. Jesper, welcome this morning. How are you today?
Hey, I'm good, Jeff. How are you?
Great. It's good to see you, even 10,000 miles away. It's nice to see your smiling face. Let's jump in. Now, I know first we're at a little bit of a handicap because you don't have any slides. You don't even have access to the clicker here. So I don't know. I'm interested to see what this 8 minutes is about. Let's jump right in. The question of the day: what's on the top of your mind today as this emerging recovery is taking place in Asia?
Sure. Apart from when Browns will get a new or a real linebacker, or if the Haslams would sell. Okay. No. Okay. I think the travel bubble conversation is, but what I thought more about this morning and last night is just this paradox on how we run our business. We kind of like back to what Tina just said, we're speaking more to clients than ever before. That's something that is an effect of what's happening. And these conversations have moved through so many stages for us. You have like the denial and confusion and anger and frustration. But the cool thing is it's moved from the dark side into a lighter spectrum as well, and come up and showed what this industry can do. You got togetherness, hope and faith, appreciation, openness, and transparency as people get together. So because of that total omni effect that has happened. So I spent a bit of time just looking at it. It's interesting how we've moved through, the 12 stages in a different way.
Talk about the data itself. Have there been any, I guess I'll say, data surprises in the region as it begins to bounce back from the pandemic? Anything that sticks out in your mind that's just been good news or disappointing?
Yeah, well, as a data company, there's been plenty of curveballs, right? Our methodology, so we are a 35 plus year company, and we think we got a pretty good thing set in stone, but we always have to be nimble and flexible. And that's shown even more on this time, just because of the scale of it, of course, but it's just that it affected everyone. So how we counting supply, right? So what we call economic supply, we had to get better really quickly in understanding which hotels are closed today, which were closed yesterday, to not just measure the occupancy of the open properties, but also the total market. So there were a lot of things like that. And we kind of understood recovery pretty well from previous scenarios. And I think one data point that always proves so important, this scorecard of benchmarking, is when the financial distress is happening, right? So these banks and lessors having this conversation now, what's the performance? What are the timeframes? Should I sell or reinvest, whatever it is? Data is such a big commodity, and this crisis is not the last one, for sure. So I think we've been thrown just by nature of the beast itself, some interesting things that we need to rebuild in our database and look at it differently. And I'm happy to say that we've been able to do that so far.
Have there been any countries that stand or markets that stand out in your mind throughout the region?
Yeah, I mean, in both directions, I suppose. From a European standpoint, it was just the magnitude of shutdowns, right? How Spain and Italy, of course, those countries were going down. Not a single hotel is open. And then Phuket here in Asia, in Thailand, when by governor decree to close the hotels, and around the region you have that. But then you also have how some countries with contact tracing medically, how they deal with it, which is a different topic, but how that goes hand in hand with how they address it. The differences are so big within the Asia Pacific region. So I look at Philippines and Singapore, Singapore's had the highest occupancy in the world, right, for the past 4 or 5 weeks. It's up at 75, 80%, very close to where it should be, but it's all isolation and quarantine guests, right? And Philippines sit there at 50% or so, but it's also protecting the community and taking a different approach, whereas other countries shut down, no hotels can run. And then you have, my native country, Scandinavia, where hotels were allowed to be open, but no one stayed in them. So I think the variations are interesting, where it turns out, and now Vietnam is a real interesting topic, how they domestically are opening up really well. And seeing domestic tourism starting to really happen, and they're keen to get out on those travel bubbles. But the question is, with whom? Who can they sign a safe agreement with? To Michael's point earlier, like getting all those details in place so it's safe for travelers to get around. Okay,
so STR monitors many metrics, but the key data points: occupancy, average daily rate, and RevPAR. So I'm going to ask you to choose one. It's like picking your favorite child, right? If you had to pick one of those metrics to watch going forward as the key indicator of what to pay attention to indicate that a recovery continues to go, which one of those is the most important data point?
Well, if I have to pick one based on where we are now, it's still unfortunately occupancy. Because you'd like to think, and everyone asks us when we present on a lot of webinars, they're like, what's happening with the rate? Well, nothing's happening with the rate, and that's back to the Omni effect, right? And we saw that also in SARS, H1N1, MERS, whatever it is. But the rate here, that's the uniqueness of this. And I don't like to use the word unique, but it kind of is because it's hitting across the board. And that means, fine, we actually won't have anyone say, I will adjust my rates to stimulate demand, because there is no demand. So the rates there are all, if it's isolation guests, it's low rate, and that's what it is. No one's done anything with it. So for now, it's looking at occupancy just to find, and obviously it's looking what kind of occupancy it is, and analyzing that, if it's real occupancy or this pandemic occupancy, if we call it that. So that's for now. But in China, we are looking at rate. Right? And in a number of other markets, we're starting to look more at rate and obviously RevPAR, because then we see corporate business coming in and some group business as that reboots. So occupancy for the first time frame until you really start hitting at least 50% of the return journey.
Okay. Let's look forward now. You have your crystal ball. You all do forecasts and update it regularly. What does the future hold? How do you see it projecting, let's call it the next 3 to 6 months?
Yeah, I think I would probably agree with the others that the travel obviously is going to be very limited until the end of the year. And that means that all this domestic business, so the domestic markets that Michael pointed out, so, well, even here in ASEAN. So Malaysia and Indonesia are our domestic markets. Once medical situation undergoes first, right? And then domestic markets and how that business can resume, which means that the Maldives, Singapore, and those markets that rely heavily on international travel, but also the component of relying on tourism as a component. Like Taiwan as a market doesn't really, tourism isn't the biggest thing of their GDP, it's much less than, say, Thailand and the Philippines. So for those countries, it'd be less of the impact. They just need the global world and the economics to really work to get back to the major engine for GDPs to start happening. So when we forecast, we've said for a couple of months now that best case scenario is 2019 is replicated in performance by 2022, right? Now, 2018 was the high watermark. That was the better year. 2019 kind of faced off a little bit generally at that macro level. So if 2022 hits 19, I think, wow, that's really well done. But remember, that's on performance. And I would say P&L wise, so the profitability in hotels, that takes longer. We can look at GFC or any different kind of crisis. Profitability takes longer because of the rising costs coming out of financial distress and recession. So that's going to take even longer.
All right, great. Thank you, Jesper. And final question, quick elevator answer, 30 seconds or so. What's the one thing the hotel industry and Asia Pacific region needs to do to keep building its momentum?
I agree with KP that everything's not going to change long term. I hear everything's going to change. I don't think so. Focus on what really matters, health and safety, that simplicity. Because midterm, what's the new norm of this different demand? Because don't plan for maybe, what's going to happen next year. What can you do this year? Adjust your sources. Respect that we will see variations within these markets for some time. But the final point, we need to learn from this. This is not going to be the last major event that hits it all. Look back. The last 4 months, what did I do? What do I need to do better next time? So just learn from this. And I think as a community, we kind of do. And hopefully that's going to serve us well when the next crisis comes.
All right, very good. Jesper, thank you so much for being here. Greatly appreciate you taking the time to do it on a Wednesday morning. It's good to see you. Thank you for being here.
Thank you, Jeff. Good luck with the linebacker.
Yes, we'll keep looking. All right.
Cheers.
Jesper, as always, good to catch up. And we're going to keep moving on. Now let's bring on Mike Batchelor, the CEO of Asia for JLL, a position that he's held since February of 2018. Mike grew up in New Zealand and has been with JLL since January 1995 when he joined the company's Brisbane office, which is where he's also joining us from today, Brisbane. Good morning, Mike. How are you today?
Morning, Jeff, and good evening to you.
Thank you. Let's jump right into it, Mike. What's on the top of your mind today?
Thanks, Jeff, and good morning to everyone out there. Listen, for me, it's the potential for this pandemic to drag on for an extended period of time, and the impact that's going to have on our industry, on the millions of people that it employs, and the communities that they support on a daily basis. Especially in our leisure hotspots like Phuket and Bali and the Maldives, where the single biggest contributors to these economies is tourism. This is going to impact property values, likely in our view in the order of 10 to 30% across the region. And that's if the skies reopen later this year and travelers start to move again. And then we see an 18 to 24 month recovery period when we start to see the sort of pre-COVID levels of profitability. We were originally forecasting a V-shaped recovery starting in Q3 later this year and looking at the aftermath of SARS, but now fear we have a considerably longer road to recovery ahead of us. And I question, as an industry, are we ready for such event? There were a number of markets that were already facing supply imbalances around the region, and now combined with potentially a protracted recovery period is likely to lead to distressed asset sales unless we start to see significant levels of government and banking industry support. Now, of course, that word distressed will be music to the ears of some, particularly the well-capitalized family offices and private equity firms that managed to keep their powder dry in 2019 when investment volumes hit record highs across Asia Pacific of just under $14 billion, which was a 60% increase over the previous year. So, Jeff, to suggest it's been a roller coaster ride over the last 6 months is an understatement.
So where are we on the roller coaster? Are we at the crest of the hill? Are we in the depths of the first hill? Are there a lot of ups and downs coming for the next 7 months at least through 2020?
Yeah, listen, no doubt. Right now, the investment markets are essentially frozen. So there were deals that were carried forward from last year, which will happen, are happening and will happen during the course of this year. But in terms of new transactions, we're seeing very few new ones happening. As I said before, about 14 billion in transaction volume last year. Our original forecast was that this year we'd see about $10 billion trade, based on fewer large single asset transactions that we saw in Japan, Singapore, and Korea last year. But we've revised that of late, and I think, you know, we're crystal balling, but realistically, we may get to 40 to 50% of that original 10 billion forecast, so maybe 4 to 5 billion this year.
So Tina talked a little bit about the bid-ask spread. How do you see that now? Are sellers being too optimistic? Are buyers being too aggressive, trying to pounce on any distress?
Yeah, listen, at the moment, there's certainly a lot of opportunistic buyers are circling, but we're not seeing a lot of owners put assets to the market. I use the analogy, nobody wants to catch a falling knife. And at the moment, we're unsure of where values are going to land and how long this is going to go on for. Is a vaccine around the corner or is it 1 to 2 years away? Right now we're in the sort of state of flux, but we do expect in Q3 and Q4 of this year that we will start to see the investment market kick back into gear. There are a number of bank moratoriums in place at the moment where investors or owners aren't being required to make debt repayments. But come Q3 and Q4, we believe that investors will need to start making repayments again. 1 and 2, banks will require updated valuations done, and that's when I think we'll start to see some liquidity return to the market.
All right. Let's talk about values for a moment. How do you establish a valuation for a hotel property as we stand here in June of 2020?
Yes, well, that's a damn good question, Jeff. I think there are probably 2 ways that investors will value or are valuing assets today, and the more institutionalized groups will do it via a 10-year DCF. They're going to take a view on when the market's going to return to normality, whether that's 3 years, 4 years, or 5 years, and price it accordingly. And other investors will look at it and probably more towards some of the distressed assets that we're likely to see and say, okay, this asset, it cost $100 million to build. I can buy it for $50 million or $70 million. It's priced on a per key basis. It makes sense, and take a long-term view. So I think 2 different schools of thought, but certainly there is a way of coming up with a value. But as I said, right now, most investors are sitting on the sidelines and waiting for those distress opportunities to appear.
It's not as simple as looking at trailing 12 or looking ahead to what's expected, right? It's just such a unique environment right now. So Mike, as we close out this segment, talk from your opinion or from your standpoint, what is the one thing that the hotel industry in the Asia Pacific region needs to do to keep building the momentum that it's established thus far in the recovery?
Well, Jeff, I'm probably stating the obvious, but we've got to get these borders open again. We have to work with other like-minded countries who have contained the virus, and governments have to get behind and incentivize people to start traveling. I read a couple of days ago what the Japanese government are doing, and they're making available 200,000 yen vouchers, or $200 US a day, and they're handing out vouchers to the domestic travelers to say, go out there and spend this money in hotels, in restaurants, in shops, and let's get the economy going again. So to see governments be proactive like that is what I think we need to see a lot more of, right around the region.
Yeah, that builds confidence from travelers' perspective, and obviously spreads some revenue around. So Mike, thank you so much for being here. We greatly appreciate your insights. Look forward to catching up with you again. And again, thank you for being part of this program.
Thanks, Jeff. And I look forward to seeing many of you when I'm actually allowed back on a plane again soon. And I can do my small part to help get this great industry back into gear.
Very good. I look forward to seeing you in the friendly skies above. Thank you, Mike.
Cheers. Thanks, Jeff.
Okay, so we're in the home stretch here as we close out this HICAP 6x8 recovery top of mind session. Last but certainly not least is Robert Hecker, the Managing Director of Pacific Asia for Horwath HTL. Since his arrival in the region with Horwath in 1988, he has had direct involvement in the planning and analysis of more than 500 projects located throughout the region, and of course was the longtime face of the HICAP conference in Hong Kong. Robert Hecker, welcome.
Thank you. Pleased to be
Glad
here.
We're glad to have you on board today, Robert. Thanks for taking time. So let's get right to the meat of the matter. What's on the top of your mind today as this recovery starts to take shape?
Yeah, well, for me, I think it's finding the balance between health, safety, and economic revival, because I keep thinking about all of these social distancing restrictions, which obviously, make sense and are part of the protocols. But, how does a restaurant that's going to have half its space, capacity wiped out, or how does an airplane that's going to have all the middle seats not used, how do they fly and how do they operate profitably? Because in normal times, they always needed to be as full to capacity as possible to even make a profit at all. So how to find that balance, because otherwise I'm not sure how long these businesses can last. So yeah, some places are opening up, but if the capacity doesn't open up, I'm not sure if they can really carry on that much longer.
Would you say that your clients and your colleagues in the industry have a handle on how to approach that yet? Are they still searching? And how long do you think it would take for them to get a handle on it if they don't have it yet?
Well, I think at least on the F&B side, I think there's been a lot of innovation and very smart aggressiveness on the whole takeout business, which has helped a lot of places survive. So obviously that's going to have to continue despite being able to open up. Although in Singapore, they're not ready for that yet, another month away maybe. In terms of hotels, I would say that, yeah, not quite. I mean, they're doing everything they can to give consumers or travelers a sense of comfort that they will be safe in their establishments. That's, that kind of thing. I call it the clean wars now. All the hotel companies are creating their battle partners for how they're presenting themselves to the market on their clean protocols and their new brand for clean. So that's obviously things they have to do to give that comfort. But beyond that, at the moment, I'm not sure what they can do. I think I saw some videos of how these protocols work, and it was instructive for a traveler to see what they would experience as they arrive at the hotel and go through every touch point of the hotel and how everything was thought of and how safe everything would be. But after the end of that video, I was like, wow, I don't want to go through that. I don't care how safe it is. So I don't know. It's a tough battle.
Let's turn our attention for a moment to development of hotels. Are there any words or a phrase that you would use to describe the state of hotel development right now?
Well, frozen would be one thing that comes to mind. I would say, yeah, because we're talking about new development, it's pretty hard, I would say, to justify certainly something that's going to be opening in the next couple of years, obviously, because the capacity there's so much capacity that needs to be absorbed of the existing stock. And that's going to take, we've been talking about it, but, anywhere from 1 to 4 years, let's say. So to get something off the ground for a new project in that environment, I think is a tough sell for financiers, I would say, and even investors would have some questions. I think it would have to be some unique destinations, that might cut through that. And, some of the more, what would I say, idyllic resort destinations that once you get to, you can feel pretty safe because there's such a low density. Those kind of places might make some sense, as long as they're working on the ability to open up their air access.
How about the transaction side of things then, Robert? We heard Mike talking about it's going to be a big crunch, a big decrease in the volume. What's your take on that?
Yeah, well, for sure. I can imagine I think there's been lots of news about it, even about investors that were hoping for distressed opportunities, buy opportunities. So that's known, but on the availability side of assets, we haven't really seen that happening yet. And part of that, I suppose, is there has been some government support in some places to keep that at bay. But also even the owner profiles, they probably are able to last through tough times to a certain extent. So in terms of activity, definitely not seeing anything. Lots of interest from the buy side, no interest from the sell side, because they know what they're going to get or be offered. So I think we're a ways away, or not away. Anyway, we're away from when things are going to start to pop up.
Okay. The overall picture, Robert, is there any government statistic, or is there any kind of metric that you use outside of the hotel industry to gauge the success or the pace of the recovery? And then how about inside the hotel industry? What's a metric that you might use that you think is important to keep an eye on as the recovery takes shape?
I guess outside the hotel industry, I guess the biggest metric is going to be flights. Surely, because that's the only way we're going to get demand into a lot of markets, including domestic markets, because they need their flights as well. But then certainly international flights would be the biggest one that people would be looking for. And then within the hotel industry, yeah, definitely it's occupancy, and seeing where that's when we start to see that tick up and at what pace is key, right? So, yeah.
Okay. So as we close out, the question that we've asked, that I've asked each of the panelists speakers so far, kind of bring us close the loop for us. What's the one thing the hotel industry in the Asia Pacific region needs to do to keep building the momentum that it's established?
Yeah, I was going to say what Mike said, because I think the regional coordination and collaboration is key. Without that, we can't get these travel corridors or travel bubbles going. So I'll let him take that one. And then for me, I guess it would be the next step is the messaging. I think that the travel industry needs to convey to potential travelers, not just the health and safety, but also, go back to it's it's all about the travel, the fun of the travel, the experience of the travel. Don't you remember what it was like? And, try to just encourage them to get back into that travel mode, despite all of the uncomfortableness that might be involved in doing it. It's almost like you have to sort of call upon their God-given rights to travel and and even altruistic in terms of, let's help places that need it, in terms of where travel is a big part of the economy. And I can see that actually having some success, I think, because there are a lot of travelers who go to these destinations as repeat travelers, and they may hold back, but if they start to hear this message of you could help by actually coming and visiting again like you usually do, and they might say, yeah, I should do that. So I think that kind of messaging is important to get it going.
Well, you probably, like me, you hear people every day, more and more people talking about, I want to get on a plane, I want to travel. So I think there's that kind of demand that could definitely spearhead that. So right on time is our our timer's up. Robert Hecker from Horwath HTL, always good to catch up with you. Thanks for being here, and thanks for your insight.
My pleasure.
All right,
Take
Robert,
care.
we'll see you down the road. Take care.
Bye-bye.
All righty. Well, that wraps up our session for today. I do want to, I've got a little, let's see here if I can do this. We're going to share the screen here. We want to make sure to let you know that our next 6x8 recovery top of mind session is going to be for our Chris and Ola conferences that covers the Caribbean and Latin America. That'll be next Wednesday, June 10th. That's at 10:30 a.m. Pacific time, 1:30 Eastern time. You can see the lineup. We have 5 of the 6 slots filled, and we expect the final slot to be filled tomorrow. So we wish you, we hope you can register for that. Also a reminder that you'll be getting a survey when you log out of Zoom today. Please take the time to fill that out to help us better make these sessions better and as we go through the future. So once again, I'm Jeff Higley with the BHN Group. Thank you so much for tuning in today, and hopefully we'll see you next week. Thank you.